Hello everyone, today we're going to be talking about two topics. The first one is about a story where you would have probably heard about this in most of the news channels about a stock called GameStop, and how a group of amateur investors or retail investors basically took down the Wall Street giants, the Wall Street hedge funds in their own game, and something that had never been seen, never been witnessed in the share market history, in the trading history before. And it was a phenomenal story basically. But if you've been following the story, was finding it difficult to understand, I'm kind of trying to make it easier to understand. When I made the video in Tamil, a lot of people had commented saying that they tried reading about it but they couldn't understand, but they watched the video and they understood a lot better. So hopefully I can do the same thing in the English version as well. Also, connected story, I mean, I say it's connected, but when I was initially trying to make it, I was trying to make it as two different videos about the proposed cryptocurrency ban in India. There is a draft bill that has been brought in to the agenda for banning cryptocurrency in India. And initially it didn't look as a connected story, but the more and more that I was making the content, it started feeling like a connected story. And I decided to make it as one video, and then end of the video you decide how much these stories are connected and how you can relate to both the stories. So we'll be talking about both the stories today. So one disclaimer that I want to give in the story is that there might appear to be a little bit of bias. So far what I've done is I've tried to give my content without any bias, just basically presenting the information in the simplest form. But today's content, it might look as if I'm a little bit biased, and I'll try to make it as non-biased as possible, but you'll probably notice there is a little bit of bias in the story, that I'm taking probably one of the sides of the story. So I'll try and present both sides of the argument as much as possible, but you'll probably end up looking at it as if it's a biased story. But I can't help it with this kind of a story, because it was basically a once in a kind story. So again, we made a presentation. I made a presentation, and like I said, I kind of put both the stories about the proposed India crypto ban and the retail investors, how they took down the Wall Street giants. And when we get into the content, you'll probably start realizing the relationship more and more. So first of all, let's start with the basics, right? People who don't even know share trading. What is normal share trading? When a company wants to expand their business, they want to get more money from investors and basically do more business. They sell part of the company, ownership of the company, in a concept called the shares. And these shares, they still retain majority ownership, but these shares enable private investors to buy ownership in the company, so that when the company is doing well, they can also get benefit out of it. So you can basically, as a private investor, you can buy shares of the company, and because you're investing in the company, you are helping the company by giving them funds to grow the company, and eventually you want the company to do well and be successful. So the share value of the company goes up, and then when the share value goes up, you can sell the company and you can get profit. If the company is doing really well, they can even give you dividends on the shares that you own. So traditionally, this is how it works. A lot of people say that share trading is gambling, for example. But if nobody did share trading, nobody bought shares of these companies will not get the good amount of investment that they get from retail investors to grow the company. So eventually, people, when they do share trading, it is actually contributing to the economy. It is contributing to some of the good companies trying to do much better business. So it's something that was really needed, and it was working really well, which is when the derivatives concepts was introduced in the share trading. There was a need for further products other than the plain vanilla share trading, where we talked about derivatives. We've even explained what all derivatives are there in the market, kind of explained it, everything with details. We saw an example where if a company wants to give employees share options as incentives, instead of just giving them shares, so that when the company performs well in the future, these options might actually financially benefit the employees. So there's a lot of things. In that, there was a concept called shorting. So what is shorting? So shorting was one of the derivative products. In shorting, basically, the the person who's actually shorting the company is trying to make sure that the price of the share comes down. That's their objective in shorting. So they're trying to make money. Again, this is another way of making money. But in shorting, they're essentially trying to make sure that the company does not succeed and the company's share value comes down, and they make money out of the fact that the company's share value comes down. Generally, the major investing firms like in hedge funds, billionaire hedge funds, right? They do shorting and they are practically betting on the failure of the company. And because of the way shorting works, and these hedge funds are generally billionaire hedge funds, they are all the billionaires, all the rich people in the world, they invest their money in these hedge funds. So when they have so much manpower and so much money and they short a company, it actually triggers the failure of the company and collapses the company's shares. They in fact act like a self-fulfilling prophecy, they used to call it, and they get billions and billions in profit. And the company that they pick for shorting, eventually when they have targeted it, when they have planned it, because of the manpower that they have, the company will almost become bankrupt. Some of the companies have even gone out of business when they have been shorted to that extent. The share value has absolutely collapsed, and a lot of companies have become bankrupt when these hedge funds, these large corporate hedge funds, move against a company and they short the company. And ordinary investors like us, like private investors, retail investors, we are called as retail investors, we will eventually lose money in share trading when most people lose money, because these hedge funds, these corporate hedge funds, which are backed up by billionaires and rich people, they actually do these kind of things against the company. And when we are really basically doing normal investment, waiting for the company to do well, and there's somebody else who's shorting the company, it actually ends up in a loss for us. So how does it actually work technically? What really happens? What is shorting? So in normal scenario, there's like a broker and retail investors, but in shorting, these hedge funds come in between. They're called as short sellers. Assume the share value is about 200 rupees. So what they do is they go to a broker. A broker is someone who's actually holding the shares. It's like any broker, right? A real estate broker or anybody. They've not bought or sold the shares. They're just holding the shares at this point of time. They are doing it for somebody else. So they have a lot of shares. So the hedge funds go and borrow the shares, and they probably pay a collateral, but they don't actually buy it. They can put down a money as collateral, or there are fees that are paid to the broker, but they don't pay for buying the shares. It's a collateral that is given to them. So they borrow, let's say 100,000 shares, 1 lakh shares from the broker. So at the moment, the share value is 200 rupees. When they borrow, they guarantee that they will give it back in like 2 or 3 days time frame. This is when they open a short position. This whole concept is called as opening a short position. So what they do is they essentially sell the whole thing, like they've bought a lot of shares, basically 100,000 shares they've borrowed, 1 lakh shares. They immediately sell it at one go for the current share price, let's say 200 rupees, right? So they get 2 crores in hand when they sell the shares, because it acts like a dump. Because when you have so many shares being sold in the market in a very short span of time, it's something unusual that happens in the market. And retail investors start panicking. It acts like a trigger where, like, why are they selling? Why are there so many sales happening? Why is the shares being sold so much? So they basically start panicking. And when the number of sales increase, it acts like a cascade, basically. So when the retail investors start panicking and they start selling, it becomes like a snowballing cascade. So eventually the share price starts falling, and panic starts increasing even more and more, because from 200 rupees, the minute that it starts reducing, and the minute everybody is starting to sell it, it becomes like a complete panic sell. If it doesn't work once, the hedge funds will borrow more shares and repeat the process again, and it'll eventually work. That's how normally it has always worked. So what they will do, they will wait, if the share, the short position, let's say the target that they had was 50 rupees. Once the share value reaches 50 rupees, they will buy the 100,000 shares from the market with 50 rupees, which is practically 50 lakhs is what they need to spend. They already have 2 crores by selling the shares in the 200 rupee range. So they'll take the 50 rupees, and now they will, they'll spend 50 lakhs, get the 100,000 shares and return it to the broker. Now they have a profit of 1.5 crores almost. They didn't invest any money. They borrowed the shares, sold it at 2 crores. Now they can buy it back at 50 lakhs. The share values has dropped literally from 200 rupees to 50 rupees. Total profit is 1.5 crores. They can make it in like 1 day or 2 days. And this is how the hedge funds normally make a lot of money, a lot of profit. Eventually, collectively, people like us, retail investors, we have lost 1.5 crores. That company that they've shorted has lost most of its money. So most of the time, who are the target companies? The hedge funds will pick a company that is not doing well, and they're already struggling. There's already bad news about the company, and they're already struggling. They have economy problems. They have revenue problems, and they're not hitting their targets, and the company is already in a bit of a struggle. So once they decide to short the company, they execute the plan so perfectly. These hedge funds, like I said, the billionaire investors behind the company give them so much money that they have practically like unlimited resources. They have a lot of manpower and a lot of resources, access to the networks, television channels, so they can basically spread news as well. So they can, they share their profits with these billionaire investors once they get the money and once they make the profit. So the only way retail investors like us can make money is we have to pick the right stocks, which are never going to be in the target of these hedge funds in terms of shorting, that they have a very strong business case and they are really doing well, and they will never become a target of these hedge funds. And even if they do, we have to have nerves of steel to hold it, and it will eventually drop, and we have to wait till it actually comes back again. It could be months, it could be like more than a year after it recovers from shorting. Sometimes it can recover faster, but eventually we have to basically withstand that point where that particular stock gets shorted if we had invested in it. So that's the only way out for us. What really happened was a group of retail investors, ordinary people with a lot of analytical skill set. I mean, the amount of analytical skill set that they had was amazing. They came together on a social media forum called as Reddit. This called as a Wall Street Bets was the name of the group that they had. And they had a very ingenious plan against these hedge funds. So they picked the companies that they knew will become targets by these hedge funds next. And they decided to play a game against the hedge funds with a technique called a short squeeze. Short squeeze is not something that is new, but the way in which they played it against these hedge funds and they used it in the scenario was what was different. So this was something that had never been attempted before. That's something that these hedge funds had never seen before. I mean, this was basically, everybody said that this was totally unexpected or, totally unheard of, that anything can even be remotely planned against these hedge funds. Like a couple of months back, if somebody had even suggested it, it would have been shot down, saying that it was technically impossible to do something like this. So that's the level of planning that they went to. And regardless of the fact that it was an open forum, it was kept ultra quiet. So what really happened was, the still step 2, the hedge funds was doing really well. They sold the 100,000 shares at 200 rupees. They got the 2 crores. The share prices started falling. And this is when the Redditor army started, countering the hedge funds. So they started doing a massive buy against the sell that the hedge funds have made. So if the hedge funds had sold 100,000 shares, they basically went and bought twice the amount of shares. They bought 200,000 shares. They made sure that they were buying more and more than the hedge fund was selling. So the market wasn't panicking. The people were not seeing it as the number of shares were being dumped. So the dump was countered with mega buys basically. So like thousands and thousands. We're talking about literally a million people buying even 10 shares, 20 shares each. The share value continuously kept going up and up and up, because now the buying is actually far exceeding selling, and people are thinking that this company is being bought, so there's a lot of demand. So typically the market makers start increasing the price when there's so much demand for a company's share. So they just kept buying. It was like a non-stop buying. They just continuously started buying against the stock that the hedge funds were targeting. And regardless of how much shares that they were trying, the hedge funds were trying to repeat the process. These guys just kept buying again and again. So eventually the share value went up to 20,000 rupees, 100 times more than the original share value. Now this might look like exaggeration for you, but I'll show you the real numbers. I've used some mock numbers here just to show you the impact that it had caused. So what it meant was the share value was at 20,000 rupees. Now the hedge funds were nearing the deadline by which legally they needed to give the borrowed shares back to the broker, which means that they needed to buy 100,000 shares, 1 lakh shares from the market, but each share was now 20,000 rupees. So they had no other option. This is called a short squeeze. They were against the clock that they needed to basically buy these shares, give it back to the broker, and that deadline is basically short squeeze, where they have no other option but to buy it at a premium that was in the market. So they basically spent 20,000 rupees per share and bought the 100,000 shares, which was 200 crores spent. So they had to spend 200 crores to buy the 100,000 shares that they had originally sold for 2 crores. So eventually what it meant was, when they bought it back and they returned it to the broker, the 100,000 shares that they had returned it to the broker, they eventually spent 200,000 crores, and because they had got only 2 crores out of selling it initially, the total loss for them was nearly 198 crores. So it was basically, where they were making 2 crore, 3 crore profit, they ended up making 198 crores. I mean, this is one example that I'm giving you, but most of these retail investors, this 198 crore loss that the hedge funds made, it's now basically going to these retail investors, and most of them are young kids, and they were basically posting screenshots in the thing where they're spent like $3,000, $4,000, and they now have millions of dollars sitting in their share. Most of them had not even sold it. They just wanted to punish these hedge funds. They just wanted to make sure that these hedge funds, of all the years and years of abuse that they have done, they just really wanted to punish the hedge funds, and they were just holding it. They were not even selling these shares, and the share price continuously kept going up and up and up. So the lot of hedge funds lost enormous amount of money. I mean, at one point, the total amount of money estimated was $70 billion. So GameStop was the company, GME was the ticker code, was the company that was used for this plan. And that was the target of this hedge fund at that point when the shorting started. And it was a brick and mortar company. It's basically a physical shop, and there was a chain of shops where they were selling computer games, game accessories, console games. And there are thousands of employees working in shops like these. These are essential shops for these people to have to earn money and to have their salaries, and that's only way that they can earn their bread. And if these shops had become bankrupt, if the share price had fallen down like the plan that the hedge fund had, these people would have lost their jobs as well. The company could have collapsed, and like so many other companies that we see collapsing, they could have lost their jobs. The share price was almost $3 by the time that the plan had started executing. And from $3, it reached to about $480, more than 100 times. In fact, I said from 200 rupees to 20,000, the 100 times looked like a joke, but in reality, it was actually much more than 100 times. Now it is sitting around $325. But that's when the twist in the end game came. I mean, people who are familiar with the Jallikattu protest that we had in Marina Beach, but something unheard of happened. We had won the protest. It was like a 7, 8, 10 day protest that we had won after the Supreme Court had ruled in favor of the protest. Final day, the police force was sent in, brutally assaulted everyone, and it kind of made it bittersweet and bitter end for a very sweet victory. So similar to that, the trading platforms started eventually joining these hedge funds, because these hedge funds controlled a lot of things: trading platforms, news channels. And Robinhood was one of the biggest culprit. It was a very trusted trading platform till last week, like Zerodha in India, which was used by millions and millions of retail investors. They stopped the retail investors from buying the stock anymore, and the buy button was actually disabled. They were only able to sell the share. They stopped these retail investors from buying and executing the plan at one point of time, so that they were only able to sell, and it was very clear they were siding up with the hedge funds, even though they were saying that they are using the terms and conditions that people had signed. Sure enough, terms and conditions, there is probably there's like about 100 pages of terms and conditions. In that, there is one line where it says that in conditions where the market is really volatile, we can do this and this. So they basically exploited the gaps in the terms and conditions, and they went to another extreme step, and they basically, when the share price was sitting at $400, they took the shares of people and they sold it without permission of those people at a very low price of $100, like 3 or 4 times less than the actual share price. They sold the shares that people were owning, and it was completely immoral and unethical what they had done. But because they had it in terms and conditions, they were basically claiming that we are doing it to protect the retail investors against the volatility. And there's a class action lawsuit that's been filed against Robinhood for doing this. But even big news channels like CNBC was basically started doing propaganda against these hedge funds, in favor of these hedge funds, not against actually. They called this Reddit retaliation as wrong, and they were trying to portray these retail investors as villains. They were trying to protect the hedge funds, saying that the hedge funds are all losing money because these retail investors do not know what they're doing. They're just playing a game. They are basically treating this as a casino, and they're abusing the system. And some of the lot of social media, in fact, social media started ridiculing these CNBC reporters, and they started supporting the retail investors, saying that look, these hedge funds have been abusing the system because it was legal. They were abusing the system all these years. Nobody had asked. You guys have never pointed a finger. They were actually responsible for the 2008 financial crisis and the collapse. And these retail investors had lost their livelihoods at that point of time. In fact, these kids who are actually in their 20s right now, they are the kids of parents who lost their houses, who lost their livelihood at that point of time, and they had seen their parents suffer drastically, and nobody had questioned anything against these hedge funds. In fact, these hedge funds were actually rescued by the government at that point of time. So they were never expecting something like this could happen, and they were actually trying to protect the hedge funds by calling them as the victims here. But in reality, the social media came out in full support of the retail investors and said that look, you guys are completely portraying the story incorrectly. In reality, what has happened is something that everybody can see, that the table has turned. People who have been abused all these years have now turned. An unprecedented, unexpected event has occurred, and you can't just take it. And in fact, they were even calling these retail investors, what they had done, as unethical and should be stopped. There were supporters who actually came, the supporters of the retail investors, experts actually, came on the news channels, counter-argued, saying that these hedge funds, you have allowed them to operate unethically. You've never questioned any of their shorting techniques. Now when the tables are turned, you cannot digest the fact that the retail investors are making money. In fact, one of the very famous, I'll even give the CNBC link for it. One of the very famous investor came on the news channel CNBC, and he took down the reporter who was trying to portray it this way. And he tore into him, literally saying that, this is exactly what happened. These people are more intelligent than you can think of. And when they retelecasted that same interview, they basically cut out whatever that person was saying. And they published a different version which had only the smaller segment where the reporter was asking the question. So even CNBC started playing up on some of the famous news channels started playing up against this towards the end game. But the ultimate end line was that in a democracy, if a retail investor is willing to take the risk, people were basically saying they should be allowed to take the risk. Fair enough that some retail investors had no clue what was happening. They were basically buying GameStop at $300, $350, which was not the actual value of the company. The company is definitely, GameStop was definitely not worth $300. Even at its peak, it was probably $50 or something like that. But it was definitely not worth $300. So anybody who's investing at $300 trying to make a profit out of it is probably taking a huge risk. But stopping them in the name of democracy, stopping them in the name of protecting them, and forcing them to sell it, or force selling the stocks that they own, was completely against democracy. That was not protecting the retail investors. That was basically protecting the hedge funds, and it was very, very clear as day and light at that point of time when these brokers, basically like Robinhood, they did it, and they lost face value. They lost completely the faith of the retail investors. They were, in fact, the name was so ironic, Robinhood, right? And people were trusting that they will actually side up with retail investors, like in UK, free trade sided up with retail investors. So now comes to the second story, right? India's crypto ban. There is a proposed draft bill. The bill is at a very, very draft stage right now. So in the past, Indian government has tried to ban the trading of cryptocurrency a couple of times. In 2018, in fact, RBI had sent a circular to the Indian banks that they should not provide services for any cryptocurrency trading, which means that if you wanted to, even if you had access to a cryptocurrency exchange, you couldn't use your Indian bank or debit card or credit card to go and buy it, which meant that majority of retail investors like you and me, we were not allowed to trade in crypto during that point of time, because the Indian banking institutions were prevented from providing services to buy or sell cryptocurrency. So, but if people had access to the non-Indian banks, they were still allowed to trade legally, because trading of cryptocurrency was still legal in the country at that point of time. In fact, we all know that basically rich people and politicians and rich people, most of them have access to outside India banks. They have access to foreign banks, and they were easily able to buy or sell or trade in cryptocurrency whenever they wanted. It was only the common man like us, that was stopped from buying and selling cryptocurrency at that point of time because of this RBI ban. In 2019, there was a draft bill that was introduced which tried to make the cryptocurrency completely illegal. The full details of the draft bill is there in the internet. I'll share it as well. They basically said even mining, trading, or even holding of cryptocurrency was going to be made as a punishable offense. That bill was still in the draft stage. It was never passed. And there was probably no detail as to why it didn't get eventually passed. Now, in March 2020, last year, Supreme Court ruled that the RBI ban on the cryptocurrency support by the Indian banks, was unconstitutional. They cancelled the ban. They basically said that a bank has to provide support for anything legally that the customer wants to do. If you haven't made cryptocurrency trading illegal, stopping the banks from providing services to it is not acceptable. So that's what the Supreme Court ruling said. So which really meant that several Indian cryptocurrency exchanges like WazirX, for example, which was eventually bought by Binance, opened up, and they became really easy trusted ways of buying cryptocurrencies than relying on people, unreliable external people. And it meant that it opened the gateway for so many Indians to actually legally buy and sell it, which is what we've been doing in our cryptocurrency series. So on 29 June 2021, Lok Sabha publishes their agenda on a daily basis. There was a draft bill that was put into picture. So this is actually, I'll show you the draft bill, but this is the Reddit forum basically. So in the bulletin that they had published, it's available on the Lok Sabha Indian webpage, and I'll share the link as well. So in this PDF, in page number 25, line number 12, or bulletin agenda number 12, there is a cryptocurrency and regulation of official digital currency bill 2021 that has been listed down as an item that needs to be discussed, which says that the bill seeks to prohibit all private cryptocurrencies in India. And it wants to facilitate framework for creation of a new cryptocurrency that is supported and issued by RBI basically. So what does it mean? The details of the draft bill are not fully available. So it is still in a draft stage. It is not yet even discussed in the Lok Sabha. It is there in the bulletin agenda for discussion in the Lok Sabha. What it is proposing is basically a ban of all private cryptocurrencies, which includes everything like Bitcoin, Ethereum, XRP. In fact, some people read it as privacy cryptocurrencies like Monero and etc. But basically says private cryptocurrencies, and today everything is a private cryptocurrency. What they are saying is only the government approved or government issued cryptocurrencies. They are trying to introduce a new regulated cryptocurrency for India, which will be issued by the RBI, controlled by the RBI, and the government will basically set what the prices are, and they'll basically control it. And that's the only thing that they want to basically allow. This goes against the rights of any democratic country basically, and no major democratic country has implemented such a ban apart from few countries like Nepal and Pakistan probably have implemented such bans, but no other countries have practically implemented a complete ban on cryptocurrency. They've regulated it, taxed it, but no country has completely banned it like this before. So what can happen now? In a ruling party controlled majority parliament, if the government wants to do something in the parliament, they want to pass the bill, they can easily do it. We all know that it doesn't get discussed in the parliament. If the leadership wants to do it, they just can do it. So there's the only thing that the crypto exchange can do is they can launch a legal exchange. But given the seriousness of the proposed ban, I think it is fair enough to say that we should expect sufficient notice is given so that people can withdraw, or they basically can manage the crypto investments that they've done, because it's something that is huge. If it is completely banned, it's going to be really huge. In fact, one of my subscribers shared this on Twitter, where he sent a mail to WazirX and they came back saying that they basically confirm there is no formal law. If something like this happened, if a judgment gets passed, there will be advance announcements, and we will get time. We're expecting that we will get time to withdraw the funds or make sure that we are able to settle. But we all know the history of things in India, like how the 500 rupees and 1000 rupees note ban, and the ban basically was given like few hours of notice. The national lockdown for COVID-19 had like few hours of notice, couple of hours of notice, I think 2 or 3 hours maybe. So it is best to be prepared for any scenario. Follow this draft bill, follow the Lok Sabha news, follow the parliament discussions that are happening, watch the news channels very, very closely. Keep connected to the updates from Indian crypto channels. Follow WazirX on Twitter, for example. Follow people, not just me. If you're getting your news only from me, a few people have said that they get a lot of the crypto news from me, but don't rely on me alone, because this is not my full-time job. In fact, I'm actually not impacted by this whole news, but I just wanted to make sure that people understood it, because I'm not trading in India right now, right? I'm trading in UK. So this doesn't impact me the least bit, but still I was very concerned for the people. A lot of people who trade in India are my subscribers. I was really concerned, which is why I'm making this video. But I may not be able to post quicker updates if something is announced within a few hours of notice. So follow all those news channels and follow WazirX. Like for example, Nishal Shetty, who's the CEO of WazirX, he tweeted a few times in this weekend, said that no progressive nation has actually banned crypto, and he also said that nearly 7 million crypto holders are there in India with over $1 billion. Thousands and thousands of crores of money is invested by Indians in crypto assets. So if they ban it overnight, they will basically erase this wealth completely overnight. So follow these kind of people. Make sure that you get the news from all the sources that you can get. But final words, right? So legal challenges aside and all of these things aside, in India, if the government says that they're going to do this to protect the retail investors, that's the fine print. They can actually do it, and legal challenge will not work, because the government can always say that there are so many scam currencies like Beldex coin, for example. There are so many scam currencies in India especially, and people abuse the cryptocurrency as an excuse and cheat people from their money. And if government plays this card and says that they're going to protect the retail investors and that's why they are doing it, even a legal appeal will not work. And if somebody had said that Robinhood will use that line to protect retail investors and they will stop them from buying a share, they will basically sell people's shares without their permission, nobody would have believed them. Beginning of last week, 7 or 10 days back, if somebody had even suggested that Robinhood could do something like that, nobody would have believed it. Everybody loved Robinhood at that point of time. So, but they did it, and they eventually did it to protect their hedge funds, but they ultimately used the excuse saying that they're doing it to protect the retail investors. So the government could eventually do something like this. They can use the line to say that they're doing this to protect the retail investors and nothing else, and they can just go ahead and pass the bill. But at the moment it is in a draft stage. At the moment we are hoping that there is rational discussions that happen, but be very, very careful. Make sure that you have a liquidated exit strategy, which means that you are prepared for this. Like if the note ban were to happen today, what needs to be done. You kind of prepared for that scenario. You kept money in hand. You kept change in the house probably. You're kind of prepared for a note ban that can happen again, right? So be prepared for a crypto ban as well. Not that it will happen, but in the eventuality that it might happen, make sure that you write down a liquidated exit strategy, that you're prepared to sell it, and just be ready. That's the best that we can do at this point of time, and closely follow the news. If they give us advance notice, make sure that we use the advance notice as much as possible. And at the moment it is in a draft stage. We haven't seen the details of it, but it is seeking to prohibit all private cryptocurrencies, and the 2019 draft will basically say that you can't mine, you can't hold. So even if it said that you can't trade, you can still hold it, at least in custodial wallets, and it doesn't have to have an exchange, it doesn't have to have a login, and you could basically, like keeping gold in your house, right? You could do it in custodial wallets like that. You could put it in a USB key and it won't even be on any device, or it won't be online. But if the draft bill says that you can't even hold it legally and it is a punishable offense, then it's a complete different scenario. So we need to basically be very, very carefully monitoring how this scenario turns up. And this is a story, if you're invested in cryptocurrency in India, then you need to be really, really paying attention to the development of the story. I will try and make as much, I'll provide clarity as much as possible. In Twitter, I'll try and provide it quicker. In video, I might probably struggle to make it quicker, especially if it's only a few hours of notice. So hopefully this content was useful to you, and hopefully now you're able to relate the two stories in your mind at least. And until next time, thank you, bye.